everybody. Good morning, good afternoon, good evening, wherever you are around the world. Welcome back to Family and Finance. My name is Rose Joshua, and today I'm just smiling from ear to ear and brimming with joy as I introduce my guest today, who is the latest mortgage broker in town, my darling daughter, Faith NJOKU,
Mhm.
born Joshua. I gotta get that name out there.
This is true. This is true.
My daughter Faith, Mrs. Faith NJOKU from Ontario, where she lives with her husband and beautiful babies. And you can tell that I'm just excited. But I'm not going to be the one talking today because she's going to talk about stuff. And like I said, she's the latest mortgage broker in town in Ontario. She's licensed in Ontario, licensed in Alberta. Welcome, Faith, my darling.
Thank you. Thank you very, very much. I'm
Okay,
very, very excited to be on here. Very
awesome.
grateful as well for the opportunity. I know you have had many, many entrepreneurs and just people with great mindsets on your channel. So I'm grateful to be a part of that crew now.
Awesome. And
Mhm.
now I'm going to go straight to business. And instead of saying my darling now, ready for business. Now, the sound, I hope the sound is good. It's kind of a little bit echoey. Is it clear over there? I can say
Clear on
something.
my side.
You're good?
It's clear on my side. Can you hear me clearly?
Yes, I can. Okay, good. So, congratulations. You're a mortgage broker,
Thank
right?
you.
Mortgage agent. Now, tell me, what's the difference between broker and agent now?
So essentially, a mortgage broker is usually sort of supervising a number of agents. An agent cannot supervise other agents, but a broker will be able to kind of cover them. And the broker also has responsibility to be
Yeah,
able to train up those agents.
awesome. And so you are a mortgage agent assigned under a mortgage broker.
Yeah.
You're licensed in Ontario and in Alberta. How did you get licensed in both just like that? Bam, bam.
So I started off in Ontario. That's where I live right now. So obviously that's where I'm going to kind of take my territory. But I obviously was raised in Alberta, and I have a great number of connections there. So there's a not to go into details, but you have to apply basically from out of province and kind of let them know I have these qualifications. The regulator here in Ontario had to kind of vouch for me in a way. And so I was able to get my Alberta license just a little bit earlier this month, actually.
Wonderful. Congratulations. So we're going to jump right into to talk for the benefit of my audience. So in all your learning so far, and I know that you're going to be great. I know that, not just because of who you are, but because the mortgage industry is always a booming industry, right? People gotta live somewhere, right? So
Mhm.
share with us some of the experiences you've had. Okay, let's organize it this way. What are your findings with respect to something that will benefit my audience? What are your findings? What have you seen? What have you found that can be of benefit to us from your perspective, from a mortgage agent's perspective?
Yeah. I think one of the things that I did want to share on actually is really some of the misconceptions that people have when looking into the when starting their mortgage journey, um, especially for first-time home buyers, but it could be for people who maybe did not know in the first round and still don't know now. So I'll kind of share a little bit just to help educate. Definitely being able to have more and more knowledge as you're going on your mortgage journey is really critical, and it'll empower you and help you to make the best decisions for your journey, right? So some of the misconceptions and just some of the
You're
things that
talking
I know.
about misconceptions, which is things that people like myths, things that people believe but are not true or not correct.
Yeah, yeah, you can call them myths. Some people call them myths, like all like myths about this, myths about that. Just anything, just what you said, what you believe might be true, but really is not.
Mm-hmm.
Um, so one of the main things that I've seen is really like regarding your credit score. So a lot of people think, oh, if I have a bad credit score, then I can't qualify for a mortgage. And so
Mm-hmm.
that it's true to an extent, but many lenders, sorry, actually will work with borrowers even up to the 600 credit score range. And so if you
Mm-hmm.
have a fair credit score, like there is some wiggle room, especially if you've been able to save up a greater down payment.
Mm-hmm.
I think a lot of people just assume that you have to have like a perfect credit score, 800 and up, to be able to qualify for a mortgage, and that's just not true.
Mm-hmm.
Now, granted, if your score is below 600 and you're wanting to still be able to borrow, there are some really simple ways to increase your credit score over time. So being
Mm-hmm.
able to, pay more than your minimum balances is a huge factor, and
Mm-hmm.
also making those payments before the due date of your cycle, because it doesn't really help you so much if you're making the payments after the cycle has already run,
Yeah.
because it's not registered on that cycle. So the larger payments you can make, the more frequently, and making sure that you submit those payments before your cycle end date does help to increase your score if you're trying to kind of get more towards like a 600 up um,
Mm-hmm.
credit score, and then also aiming to try to keep your credit utilization is what is called to 30%. So that's like, let's say if you have a $10,000 credit card as an example.
Okay, so you need to take it nice and slow because you're using words that are not everybody on the street knows, right?
Exactly.
So
Yeah.
you're talking about credit utilization of 30%. What
So that's
is
what I was going
that?
to break. So basically, credit utilization is just a percentage. So using the example of if you have a credit card, let's say your credit card is $10,000.
Mm-hmm.
Keeping a 30% utilization, sorry, is basically just trying to make sure your balance does not go above 30% of the amount of credit you have available. So if you have a $10,000 credit card, trying to keep your balance below $3,000 and will help.
Is it $3,000 or $7,000?
Um, $3,000. So your goal is to is to reduce the amount of because if it's $7,000 and you've used 70% of your credit amount, so we
Okay,
want to keep you at 30%, which would be $3,000 or lower.
I
So
see. Okay.
So as you're doing that, it's better for your credit score to not go above 30%. So that's just
Okay.
one of the minor ways you can use to increase your credit score over time if you're trying to get it a little bit higher up.
Okay, so you said two things. One is that a lot of people believe that they cannot get a mortgage if their credit score is below 650. I mean, it's 600 or so. Or if they have a low credit score, right?
Mhm.
So, so but what you're saying is that there are lenders out there who will lend, who will give you a mortgage, give us a mortgage
Yeah,
if the person's credit is on the lower end. So that's one.
yeah,
The
yeah,
second thing you've said is how we can build our credit. Number one, you said we should pay our bill in time, like before the date,
yeah,
right? And then number two, you said we should keep our credit utilization to below 30%. Okay,
exactly. And then
that's cool.
one quick thing as well to add to that, I mentioned it before, but just to make sure it's clear, is to pay more than the minimum payment if you can.
Pay more
I
than,
know,
yeah, yeah,
yeah, so credit cards will say, "Oh, this is your minimum payment," but the minimum payment will keep you in debt for really just for longer than you really want to be.
yeah.
So yeah, I'm sure that's possible as well.
Okay, cool. So that's the first myth.
That's the first miss, yes.
Okay, okay.
The second one that's very common that I had to unlearn myself was that you need at least 20% down payment on your home. That is not true. Actually, really the minimum that I've seen is having 5% down on your home.
Yes.
There are certainly benefits to having 20% down payment. But at the same time, if you want to have access to owning a home and access to a mortgage, you usually need a minimum of 5% down. Um, so it's just to really help people understand you don't have to have $100,000 in the bank unless your property is worth 5 million. Then
Yeah.
it makes more sense. But you don't require that full 20% down. So it does make home ownership more accessible, knowing that
Mhm.
the minimum you need is 5%.
Okay. So everybody,
Yeah.
you've heard it. I've been singing this like a song for years. You don't need to put down 20%, okay? So
Mhm.
here is the expert now. The expert is in the house
Yeah.
saying that what you need is minimum 5%. And I
Yeah.
would say, so like 20% on, not 20% unless it's absolutely necessary. Is that right?
Essentially. Like there are benefits to it if you have um so there's this subscription, so to speak, called mortgage insurance. So if
Hmm.
you do have, if you don't put 20% down payment towards your mortgage, you do have to pay what's called mortgage insurance. It's essentially a protection for the lender to make sure that if anything happens and you're not able to make your payment, they're still going to be protected. So
Yeah.
they're kind of the con, so to speak, of being of having that 20% or not having that 20% down payment. But if you're still able to get a mortgage with less than 20%. So
Yeah.
it's not a make or break situation.
Hmm. Okay.
It's
Okay,
really
that's
great.
good. Okay, so
Yeah.
myth number two, you don't have to put down 20%. You can get away with 5% or, you know, a bit.
5,
Yeah.
10, 15,
Okay.
7. Yeah.
All right.
And so
So third myth, myth number three, misconception, myth number three. Yes.
a little bit of both. Really important, this actually. So some people believe that, well, even me myself included, I'll be honest with you, I've learned a lot since I got my license.
Yeah.
So I thinking that you only have to prepare for the down payment is a huge myth. And
Hmm.
it's can be a bit risky because so essentially when you're trying to purchase a home, you have to consider something called closing costs.
Closing costs.
So
Okay.
so that's things like legal fees for your lawyer, disbursements of for sending out the cash and being able to actually have that allocated.
Hmm.
There's things like a land registration fee in Alberta or a land transfer tax in Ontario, kind of same concept. And
Hmm.
so there can be different costs that you may not have expected to come up, and they can absolutely stand in the way of you being able to purchase your home. So if you
Okay.
do pay for those things before closing, it's the work that has been done up to that point, if you're not able to make that payment, can all be for naught. Um, so I do encourage people, if you do a Google search, you'll get a 1.5 to 4% of the value of the home is what's
Uh,
recommended for to save for closing costs that you can pay right away before the deal closes.
yeah.
I I'm a conservatist, so I do encourage save 5%, because so you
Oh,
can cover. I know, because you can
5%
cover
is a
all of
lot.
those. Because it's 1.5% to 4 is the general range. So I'm like, just I like to have the extra, just for things like appraisals that maybe you didn't see coming, inspections
Hmm.
that you didn't consider, that you would need. And so just kind of extra what ifs, right? Or having to pay your first month of mortgage insurance, right? All
Yeah.
these different things. And even if you don't end up using it, then now you have extra money that you saved up.
Yeah.
So that's kind of my rationale behind it. Again, if you do a Google search, it's 1.5 to 4 roughly percent of the home value is what you should save. I just recommend slightly differently because I don't see a downside in saving extra money that you could use either towards the purchase of your home or towards something else afterwards if you realize you don't need
Yeah.
it. Right. So those
Yeah.
are kind of my main three the main three myths or misconceptions that I've learned that I really do believe that people need to know more about. So
Okay.
yeah, I'm not sure if you have any comments or questions on that too, because I know you've been in real estate a long time.
Yes. And I've been talking about mortgages even though I was not licensed to be as a mortgage person at the time. But so so this last one you talked about is the closing cost. And
Mhm.
in as a realtor, as a real estate agent,
Yeah.
whether it's the seller side or the buyer side, I know that, closing costs are very important because number one, as a buyer, you have to do a home inspection, right?
Yes.
And the home inspector, depending on the size of your house or the type of place, they will charge you $500 or $1,000 for, home inspection. So that's part
Mhm.
of the closing cost. And then
Yes.
I've seen some of my clients go, "Oh, can you ask the lawyer to give me a deal?" It's like, no, the lawyer cannot give you a deal because the lawyer gets instructions from the lender, and the
Mhm.
lawyer has to do exactly what the lender wants, and everything is like everything is pre-priced, right? You register the title, there's a price there. You discharge some KVRs, there's a price there. And everything, nothing is negotiable, right? So,
Exactly.
so yeah. So you need to save for
Yeah.
the lawyer's cost. Taxes
Yeah.
are not negotiable, right?
Taxes are not negotiable as much
Yeah,
as you might want it to be.
exactly. So that's actually good. I'm very excited that when you said I've learned a lot, I learned a lot during my licensing because sometimes, we just kind of go through life in a kind of la la land and just going nicely without
Yeah.
in blissful ignorance until we actually start picking these things up. So I'm so excited for you. So
Yeah.
excited. Congratulations.
Thank you. And I'm
Yes.
just glad to be able to share and hopefully equip people who are looking to purchase a home. It's good to
Yes,
have
yes,
knowledge.
yes. So let's move on to part two because you said you're going to talk about misconceptions and then you're going to talk about um
The
mistake.
mistake.
Okay.
Mhm.
So there's misconceptions and there's mistakes. So part two now, let's address the mistakes. So you have how many
Yeah.
mistakes did you want to talk about?
There's many. I think I'll talk about four, but the fourth will be pretty quick.
Okay.
Um, I'll focus on three main ones just to kind of like help
Yeah.
people with mindset more than anything. The fourth one will
Yeah.
be pretty fast.